The rate wars are continuing to be waged by the major banks as millions of Canadians approach mortgage renewal, whether in 2024 or 2025. The banks are very conscientious about what is happening, especially around mortgage renewals, as purchases have slowed down across the country. Major banks are looking at their options, how to be more aggressive, or at least how to continuously hold market share. And that is a conversation that we'll unpack this week. We'll also be talking a little bit about where some of the current mortgage rates are when it comes to purchases, refinance, renewals, so that you can have a better gauge of what is sort of happening right now in the market. But first, if you have not subscribed to the channel, we invite you to go ahead and do so. Don't forget to leave your thoughts, questions, and comments in the comment section below. While you're down there, hit that notification bell. Don't forget to like and share the video. It does help the YouTube algorithm. But let's get right into it. So a few weeks back, we definitely heard from RBC talking about this mortgage rate war, where they're very concerned about their position as one of the major banks, one of the top players amongst the top 5 Canadian banks. And as they continuously maybe lose market share to other lenders, and as purchases continue to dwindle, as many Canadians are not really getting out there into the market actively at the current moment, the banks are looking at ways to maintain dominance. And one such way that they would be doing that is to be super aggressive on that mortgage renewal. Remember, it's always cheaper to keep an existing client than to acquire a new one. However, many banks are looking to acquire other banks' clients and giving them certain incentives, certain programs and promotions in order to capture those particular clients. And those particular promotions are generally in the form of maybe a significantly lower rate than what is being offered by your existing lender. Maybe it's a cashback promotion. Maybe it's a switch and transfer rebate. And obviously, working with a professional understands what these situations look like and where you can get the most aggressive offer is obviously in your best interest to keep thousands of dollars in your pocket. So where does this leave you as a potential buyer, someone who's looking to renew their mortgage, someone who's looking to restructure, is ultimately understanding what options you have available. Now, a lot of times clients will come to us, say, Anthony, we're looking for XYZ, we're looking to refinance, purchase, whatever the case may be. And as a mortgage professional, it's very important to understand a few different things. Why it's really important to work with a mortgage professional. I mean, that is ultimately a choice that you need to make. But for example, a lot of clients, when going through the process, we'll see them, they'll be shopping around and bank to bank, and we'll see multiple credit pulls, and obviously that can be detrimental to your credit rating, right? And if you start to see multiple inquiries, it doesn't really impact your credit rating too well. And with a broker, ultimately one advantage you may have is obviously we were able to pull one credit report through Equifax or TransUnion and be able to use that report to shop around to multiple different lenders without impacting your credit each and every time we shop it to a different lender. So you do want to be conscientious about credit preservation when shopping around. So one other thing to understand right now, especially as you're going through this renewal journey, we are definitely in a rate cutting cycle, rate easing cycle, especially here in Canada with the Bank of Canada, now cutting 3 consecutive times. The conversation is whether or not the Bank of Canada will continue these cuts well into 2025, and basically at what point will they stop cutting rates, and what will the terminal rate or the neutral rate be for the Bank of Canada. Now, what do we mean by that? That is basically the point where we're going to hear Governor Tiff Macklem come out and say, hey, we're no longer cutting rates anymore, or the environment, the economy is at a pivotal point where we don't actually need to do that. But as it stands right now, with unemployment ticking up to 6.6 just for the month of July, and August, I should say, and obviously July was like 6.4. So we're seeing this slight uptick. This is very problematic for the central bank, for the Bank of Canada. The next time the Bank of Canada will be meeting will be on October 23rd, where it is highly probable that they will once again cut rates at that meeting. Then following that will be in December to round out 2024. But just sort of switching gears, it's very important to understand now that we're seeing the Bank of Canada cut, that's 75 basis points of cuts over the past few months. So we saw June, July, and now September, potentially in October as well. Well, we saw prime go from as high as 7.2% all the way down to 4.45% right now. So ultimately, this is a really big move for the Bank of Canada for many Canadians who are on the fence right now, especially as they approach mortgage renewal. Maybe you have received your renewal notice, an early renewal notice from your lender, asking you to, sort of start looking at your options. You might be getting calls and you might be questioning, okay, what do I do? Do I go fixed? Do I go variable? Do I go long-term fixed, short-term fixed, like 1 year, 3 years? What are the options? I mean, ultimately, there's a lot of options for you. And when going through this conversation with our clients independently, obviously understanding their scenarios, it's not a one size fits all approach, right? When approaching your mortgage renewal, you have to really consider what the next few years looks like. I mean, ultimately, a lot of Canadians will want to chase the cheapest rate, but may be blinded by what potential economic, geopolitical issues might be unfolding, because ultimately locking into a fixed rate mortgage, depending on the type of lender that you lock into, may deem you eligible for higher penalties, right? You have to understand the penalties, especially if you're one of these individuals that will see, hey, I locked in at 4 point, XYZ, and rates have now dropped to maybe whatever 3 point XYZ, right? Let's just use those numbers. Not to say that there could be a three handle anytime soon, but we might get there, right? Especially for the most popular types of products. And understanding, hey, am I one of these types of people that are going to want to get out of that mortgage sooner, pay the penalty to go into the lower rate, and what will it cost you? Because remember, when you're breaking a mortgage with many lenders, you're not going to be able to wash away the penalty. Now, there might be some lenders that will offer you a rebate, maybe a small percentage, up to 20% back on that penalty if you stay with that existing lender. But if you're leaving that lender to go chase a different lender with a much lower rate, or maybe a cashback promotion or something along those lines, well, you have to keep in mind that you're going to be paying that penalty. And also, duly noted, you should be very aware if you are taking a cashback mortgage, and not every one of these cashback mortgages are created equal. Some of them you will have to pay back the penalty, or sorry, pay back that actual cash portion if you get out of that mortgage outside of 5 years or 3 years. So understanding those agreements, what you're involving yourself into, is super, super important, because we get a lot of calls sometimes. Clients, rush into things. They get their mortgage renewal. They're not sure what to do. They just sign back and they really don't think about, hey, I have all this debt over my head right now. Maybe I don't qualify at the current moment because my partner may have gone off of work, something catastrophic had changed, but ultimately in the next year or two, you may be able to rebound from that situation. So you have to really understand what it is that you're doing. And the best way to really take advantage of, understanding what is about to transpire in your financial situation is, one, obviously getting ahead of that renewal. So understanding when that mortgage is coming up. Don't leave it to the last minute. Sometimes, people forget about that mortgage renewal. So if there's a reminder, just look at your mortgage renewal date. When is the mortgage coming for maturity? Set a calendar reminder for a minimum of 3 to 6 months before, so that you can start to plan out the next few years. Whether you own a home, maybe you're looking to move, maybe you're looking to renovate, maybe something has changed in your life. Quick caveat, obviously, if you are chasing a variable rate mortgage, understanding, is your lender giving you an adjustable rate mortgage, or is it a variable rate mortgage with a static payment? Because these are two different components. And a lot of times we're taking clients from some of these lenders that have these static payment mortgages where the mortgage payment doesn't change. Even when the Bank of Canada cuts rates, it stays the same, right? The only thing that changes on that particular product is the interest and principal calculations, where that interest goes, right? So as the rates drop, more money goes towards principal than towards interest. But for a lot of clients, especially locking in right now, they want to chase that particular road down, as the Bank of Canada is potentially going to cut aggressively. So you want to make sure that you're in an adjustable rate mortgage where your payments will move lock and step with the Bank of Canada and your lender's prime rate. So understanding that, super important. But now let's get into some of these fixed rate mortgages, these variable rate mortgages, where they are right now. Let's quickly go over some of the most current rates right now. I know a lot of our viewers want to know where rates have been, where they're going, and ultimately looking at August, September, as we look back to June, July, August, and now as we enter September. Remember, September, not done yet. We could see some further discounts in some of these rates as we progress forward, as some of those things we were talking about earlier about the US, what's happening with the Bank of Canada, as those bonds continue to pull back, we could see some changes in those fixed rate mortgages. But most common, 5-year insured mortgage, that is for purchases below 20%. maximum amortization, obviously 25 years. Obviously default insurance premiums are added. This is ultimately also for some insurable products. If you're looking to renew or move your existing lender from where you are now to a different lender, some of these broker-friendly banks are offering some really aggressive rates on those mortgage renewals. They're as low as 4.39% for 5 years. Now, the insured variable, same criteria, all the things, 25-year AM, all those things included, we're at around 5.45%. So as you can see, there's a little bit of a gap, a little spread between the variable and the fixed, but that is pulling back slowly as we see the prime lending rate for the Bank of Canada pull back. That policy rate obviously impacting prime lending. Prime lending, we saw it 7.2, 6.95, obviously now 6.70 to 6.45 just as of September 4th when the Bank of Canada met last. And, we're seeing some discounts happening there. Your 5-year conventional product has obviously pulled back as well, 5.14%. Wow. In June, all the way down to 4.64, 4.69 right now. And these are obviously for conventional products. That's your 30-year amortization. You can also take a 25. These are for refinances or a purchase that is above $1 million, no default insurance premium added to the conventional mortgages. You're paying the premium basically in the rate. Now, the 5-year conventional variable rate mortgage, obviously 6.95 prime and June, obviously pulling back as well. But you will notice in July, there was a little bit of a heavier discount as some of the lenders were very aggressive on their variables to get clients into those variable rate products. But a lot of these discounts have been pulled off the table for the time being. And obviously we're seeing right now about prime minus 70, prime being 6.45, obviously minus 70, you're at 5.75, still a significant way away from your 4.64 to 4.69 over a full percentage point difference. And then you have your 3-year insured. These are really the popular products for a lot of Canadians. 3-year insured, obviously going from 5.09 all the way down to 4.79% as of right now. 3-year conventional, on the other hand, slightly above at 4.89. I mean, keeping in mind what you're looking to do, if you're looking to refinance or you're just looking to renew, these are really key components. Renewal means you just sign back. Refinance means you're going to touch that mortgage. You're going to ask the lender for more money, potentially pay out some debts or do something. And that ultimately comes generally at a premium. Most of the banks just want to renew you, sign back, no questions asked. Obviously, for an insured mortgage, you don't have to requalify. If you're looking to refinance, well, you need to go under the requalification stress test, 5.25%, or the contract rate plus 2%. So right now, just for an example, if you're at 4.79, you're not qualifying at 5.25, you're actually qualifying at 6.79, right? Which is a lot better than qualifying maybe if you're in a variable at, 7.75. So as you can see, selecting the right product, depending on your qualification, does have a very big role to play. But let's move over to the 3-year conventional, obviously 4.89%. 6-month insured has come down significantly. This is still a product that we haven't really done too many of, but some clients do like the fact that there's a 3 handle in front of it for 6 months. But keeping in mind, there are stipulations with these types of products where you have to renew with the same lender in 6 months. If you have any further questions about how these rates apply to you, you have a few things you can do. You can reach out to us directly, or in the description box below, you can download our app. It's free, and you can sort of play around with those payment calculations, see exactly what you want to do. Now, ultimately, we'll see what happens with these rates, but I hope you found this video helpful. I hope you found the information helpful in this video. And if you did, please do us a favor, like, share the video, drop a comment, let us know what you would like us to cover in a future episode. But we'll leave the video here, wishing everyone a wonderful Friday and an even better weekend ahead. Thanks again for stopping by.